Hi, this is Randy Finney with Right Side of the Chart, and today is Wednesday, May 22nd, 2024. It's 11:17 a.m. Eastern Time as I'm starting the video, and we're going to do a deep dive into the metals and miners. As recent as yesterday, I've been saying I don't have very strong convictions. I've kind of been standing aside that trade for a while. About a month, maybe even 6 weeks ago, I threw out a setup looking for a pullback. We hit the first three support levels, but as I said back then, you had to take out S3, and that's what I do. I'll get to that in a second. When I give you, that's what S1, S2, S3 means, or R1, R1. Those are resistance levels, not targets. They are, targets are often or almost always resistance levels, anyways, or support levels, the price targets. But the way it works is if you have well, let me dive into the charts first, and then I'll show you what I'm talking about. Or I'll get to there in 1 second to show you what I'm talking about with, support levels having to be taken out that then trigger a buy or sell signal. And if it's on the upside of bullish setup resistance level. So this goes back. The last time I had strong convictions on the metals and miners was actually February 27th, 2 days before this post. And then I followed up with it to give you static charts. I know a lot of you out there don't have time for the videos, or it just helps to have these screenshotted charts. So then I followed up, and that was after Tuesday's video, and highlighting the silver. Really, I was harping on the silver miners. There are times where I'll favor the gold mining stocks or gold, and but typically to be bullish on one is to be bullish on the other, and most importantly, if you can make a strong case to be long or short gold, you can make a good case to be long or short the metals. The miners, the gold mining stocks. They're basically a leverage play on gold. I always say that in gold and silver. Meaning if gold goes up X, they go up 2X or 2.5X or 3X. There's no set formula, but it is almost always a multiple of what gold does. So, they're going to follow. And same thing with silver and silver mining stocks. And every now and then you get a nice setup where silver doesn't get the memo. I call silver, gold is silver's big brother, I like to say. And gold will sometimes rally, and then you see silver kind of lagging behind. And then when the charts confirm, if again you can confirm it with a bullish chart on silver, that's when you get the great trade to play that game of catch up, because silver also moves in a multiple of gold. When they're trending, silver tends to go up more in percentage terms when they're rising, and down more in percentage terms. So that's kind of how I trade gold and the miners and metals. So what we're going to do today is look at the miners. I already gave you some pretty clean chart of gold today, and back then I'm going to start out here. This was silver. That was pretty much, we nailed the lows. Got in there right there. You can see it 22.55. That was the old chart from back in February. Give you some initial swing targets, swinging it up to 28.37 right there. And then GDX as well. Targets here right off the 25.69 support. And then my top pick right here, that's where I had an overweighted. I often say this too. Now, I say a few things regarding the miners. First of all, birds of a feather flock together. That holds true in some sectors more than others. Biotech is a great example. They don't always flock together because they have different drugs in the pipeline. Some only have one drug in a pipeline, and that may either get nixed with FDA approval or not now. And then others have more broad, diverse pipelines. So there you have a lot of variance. The miners, no, they are all going to go up for the most part. They tend to move very closely. However, I also say anytime you're bullish, or I'm bullish or bearish on a sector, I can sniff out the most bullish or bearish stocks within that sector and almost always outperform the sector ETF. So the benefit of a sector ETF, safety in numbers, diversification. You don't get clocked on one, if you're holding one or two metal mining stocks, and those just happen to report bad earnings or some little shenanigans going on in the company. You can feel the pain. So I'll let you decide. If you don't know what to do, safety numbers, ETFs are great. GDX for the miners, GDXJ for the junior gold miners, SIL for the silver mining stocks, and I think it's SILJ for the silver juniors. But WPM, that was the one I highlighted here. So there were your levels. They were pretty much coming off these previous reaction lows you can see in GDX and gold and everything else. and silver miners. That was then. This is now. And I'm doing this video because one day made a difference. I've been going over these charts. Got that set up out to you today. And as of today, unlike yesterday and unlike 3 weeks ago, I now have strong convictions on this sector. And it'll probably be my highest weighting here soon. We have, like I said, I give you some pretty clear sell signals on gold. And I'm going to go over the rest of it with these miners. And, there's two takeaways. If you have the time inclination, if you agree with this analysis, you can then pick the ones that you like best, put it together a little mini portfolio, diversified. At least, I like to do at least 5, 6, half dozen. If you can do up to a dozen, great. Brokerage commissions, either free or dirt cheap now, depending where you're trading. It's easy to do that. It's not cost, doesn't eat at smaller portfolios like it used to when, commissions were higher. All right. WPM, that's where we took it. Ripped up to the 5 targets. This one just kept going like the Energizer Bunny, but it has come full circle. And you're going to see this in a lot of the charts I'm going to show you are very similar. If you look here, I don't have all the annotations, but with the DH, DL, but that was a divergent high. And I've traded this stock for years. I've traded all these stocks for years. That's what you got. And these are big moves. And this is why I tell you that, and I told you in that video back in February, the silver miners tend to give you, if you can get the trends right, these powerful trends, you get more bang for your buck than you do on gold itself, silver itself, of course, and even the GDX. The silver miners will usually outrun the pure gold miners. And a lot of them, do both. And by the way, depending on where they're mining, they can pull, they're not going to leave an ounce of silver there in the dirt and take the gold. So some do both, but this one tends to be in the, I've always considered it more of a silver miner, even though it says gold. Boom, bearish rising wedge, watch, rinse, repeat. Oh, I was trying to measure the drops for you. That's what I was doing. Got off on a tangent. The swings are great. That was a 45% drop off that divergent high. And there was a sell signal, and we probably traded it back then. I'm a race. Sometimes I redo these charts, I race targets. Divergent low, we rallied 83%. Ended with, you got it, divergent high, dropped down, had a little divergent low there, had a nice rally, double digits, wasn't as big as the rest, but still 11%. And then finally, I don't have it marked up here. I'll throw it right now. I have different boards, but that was an even bigger divergent high. So it's kind of like the stock market I've been talking about. You get these, divergences that continue to build, and you do have the counter trend rallies along the way. In a downtrend, a counter trend rally, a counter trend move is an uptrend or a rally. And then, when the divergence gets bigger, it still matters. It even matters more because you tend to get the bigger trends. So anyways, that was that. And this time around, there's a great example. You guys hear me talk all the time about positive and negative divergence and how a trend change is likely. And we didn't have it here. I bought these stocks for the reason they were very oversold. All the reasons I covered again in that video. I'm not going to repeat. But and you see, I'm a swing trader. So we went up, we hit T5, you can see the final target I had at the time, pulled back, hit it again, kept trading around there, that's buried here, came all the way back down. The pullback after, it overshot T5 by a hair. I'm trying to measure the pullback, just try to put it in perspective. That was a 6% drop. Probably would have stopped out most folks, but we were able to get out there. And then I even mentioned, I believe at the time, recycling back in because remember, resistance once broken, like T3, we took it out there, then becomes support on a pullback. And so now what's happened since, we've come full circle. Again, wish I could tell you I milked every penny of this one. I certainly didn't, but that's fine. That's, you can get 20 something percent to T5. Get in, get out, move on to the next one. Sometimes you get these runner trades. But again, I'm doing the video because my convictions are strong. This is very clear, clean, negative divergence, overbought conditions. And all the better, a nice, clean, well-defined uptrend line, aka with with the divergence line up top, that gives us a big bearish rising wedge. Absolutely no different from this one here. That one you just had a breakdown, and a lot like the stock market seems to be doing now. You pushed up, made a marginal new ever so slightly, but still divergent high. you were overbought, and then came the next trend. So that's it, guys. I'm going to go through the rest a little faster. I'm going to start with the silver miners. I'll end up jumping back and forth to the metals because I do want to show you some things there. But just kind of show you how these things look. And you can see back here, Pan American Silver, another one I've traded for years. Just these guys trade very well to the technicals. There was a divergent low. Doesn't look like much again, but it was a double-digit rally, 25% or something. This one, we went up, hit T2 in reverse. There's an example. We don't always get all my targets quite often. And we reverse on the final target. Sometimes we continue past the final target, like WPM I just showed you. That one we hit T2. And that's what I always say. When you get up to these levels, and if you look at the 60-minute chart, you may have had divergence. At the very minimum, you had an uptrend line in which to say, hey, okay, I'm going to stay long as we're above that uptrend line. I'll buy pullbacks to it. But if it goes, then boom, you might want to get out. And then what happened? It went up. And you can see my divergence lines are already drawn down here. You made effectively a divergent high. You have ever so slightly, if you squint, higher high on the RSI, equal highs on the PPO, but higher highs in prices. And so that's, again, that's negative divergence. And then the downtrend continued. And then this is where we bought it earlier this year in February, or highlighted it. And look, it's come up. Nice, clean negative divergence. No sell signal yet. So what I'm doing, I can't recommend or tell you what to do, but I set trend lines, alerts on all these trend lines, and when they break down, it'll probably be like popcorn going off on my screen within either the same day or within the same week, one after another breaking down. The more that break down, the higher the probability is those breakdowns are going to stick. And as I said earlier today, you got to have the king. Gold has to break down. I give you the levels to watch there. So sometimes the miners may break down, a couple of them, or GDX might break down, like I said earlier today. But if gold holds support and they rally, dip buyers are going to keep buying pullbacks to support until it stops working. So I'll get to gold in a second here. I just want to cover these silver miners. So, and targets, okay, WPM here. Okay, targets. These three right here, minimum right there, 54.37. Again, minimum, probably get a reaction, 4%. Not bad for a swing trade. If you get it, it'll probably happen in a day or two. And I make a lot of things up in trading. I have a term I made up years ago called velocity. It just means, if you can, with active swing trading, let's just say that that's all this thing does, 4%. You take profits there and you get the 4% gain, and it happens in, we'll just say, a week. It'll be less than a week when that breaks down. It'll probably be a day or two, like I said, but let's just say it takes a week. You get 4%, annualize that out, 4 times 4 weeks in a month. There's actually 4.3, but you just say 4, that's 16%, 12 months in a year. You get the point. So that's what swing trading is about. Sometimes you just, everyone has a different style, and then at times the market or the sector you're trading is going to dictate what style you need to be doing. Sometimes I'm in hit and run mode, active trading. I'm just looking for quick, in the equity market, sometimes maybe 1-2% moves in the NQs, the NASDAQ futures, or whatever I'm trading, and in the metals. However, I want to say this: I see potential for a much bigger turn. Even though gold has broken out to new highs, everybody's foaming in the mouth bullish on gold and silver right now, and that's also a reason to be, at the very least, cautious. But I just want to say, from the scope of these patterns, again, that's why I spend the time doing these videos. This setup is no different than it looked back here. I will say gold breaking out the new highs. You may not get that big a move, but you could as well. So I'm giving you these initial interim targets, what I call relatively short-term swing targets. And that's my final current target right now is about 51 right there on WPM, and that's 10%. So that's, I think, a sweet spot, a likely swing target. And again, right now, my preferred target. Depending on what happens, we may not even, I may do this video, spend an hour talking about these things today, and we don't even get the sell signals. It's moot. Move on. These are setups. Setups are untriggered potential trades, and quite often I'll post a setup that never breaks out, and so it's never a trade. But if we start breaking down, which I think it's imminent, that's why I'm doing this video right now. And if I told you I didn't start taking positions today, I'd be lying to you. So I've already started scaling in, but that's me. I'm aggressive. Sometimes I get in front of these. You want to play it safe, wait for the breakdowns in silver and gold and GDX and all that. And these guys too, remember, it's collectively. The more the breakdown, the more selling you're going to see in those names, and then that's going to bleed into the other names because of the high correlation between these stocks. PASS, Pan American Silver, beautiful little bearish rising wedge. Again, we traded it back here, T1, T2. Oh, maybe I already covered that one. Yes, I did. AG, here's another one. Caught this little divergent high there. Only went up to T2, and then the downtrend continued. But again, I highlighted it back here, along with these other silver stocks. 100% return. So if you took it back there and you held it and milked out the run up to that 836, these I believe would have been, I didn't even touch these. They were old resistance levels that were still very valid. Again, it's all covered in that video. So yeah, you could have swung it up to that 836 level. We're almost there, not far from it now, but look, we're right on the trend line. No divergent high, but sometimes you don't get it on all of them. You have it on the majority of them. FSM, Fortuna Silver Mines, again, since it was highlighted back there, about 126% return. And yes, this has come full circle. In fact, it's ironic. Back here, off that divergent low, I had a max target of up here, T7 590. Look what it hit the other day. And I have not modified or touched that line. Created that back in 2020, as you can see there. And we hit a high of 599. Close enough for government work, folks. So that's, and why was that level there, and why am I harping? We didn't reverse hard yet. We just reversed a little bit because that was massive resistance there. You had this island top. There were 101 reasons to short the stock back here, which I believe we did. Probably would have. These are old annotations. And then that was just huge support. You could even probably fit in a head and double complex head and shoulders pattern there if you want. Complex head and shoulders to have two shoulders on each side, sometimes even double heads, and beautiful little pattern. And so there we are. So we're back to that. My point is we've rallied up to significant resistance. And so that's also a reason. Some more aggressive short entry, the more higher probabilities wait for the trend line breaks, but you can also make a case to short a rally into resistance, especially if that rally if you have negative divergences and overbought conditions on the indicators. Okay, so we'll go a little quicker here. There's Mag Silver rallied since that February video, and about 76% right into resistance. I haven't touched this one, I don't believe. Let's see, I created that back. Could have tweaked the line. Maybe I did. I went through some of these charts today. But it's a reaction high right there. Targets were back here. That was a target on this previous trade. T1, T2, T3, and that there's a case we hit, we would have gone long off that low, divergent low there, and hit the final target, which is T3. TL means downtrend line, so that was hit there, and then it would have come in together. Then we put in a divergent high, gave us this, divergent low, gave us that. All right, you guys get the point. Simple stuff. Wash, rinse, repeat. EK, Endeavor Silver, EXK, Endeavor Silver. There's your uptrend line at resistance now, about 384-ish. SVM, negative divergence, trend line there, minimum target 316 right there. ASM at resistance, again an old target I had back here, which we would have felt just a hair shy of on that last those trades back in 2022. And then this was the February where we were. And some of these that I'd mentioned had already put in divergent lows back during that video, and so that one ran up from that February video about 150%. USAS, this one just broke out of a downtrend line. What I'm doing in this watch list, it's a silver miners watch list I have. I only have a few more. We're going down in market cap. So I started out with WPM. That was my top pick before. That was the biggest one, a $26.2 billion company. We're all the way down to 71.9 million now. This is a penny stock. And these are what's been moving lately. When they finally get the memo, it's just like the stock market now. There's a dash for trash. The meme stocks are back in vogue. AMC, GameStop, all that junk, Bitcoin. They're all, and that's what happens at the end of a rally. Market's been going up long enough. Everyone thinks they're bulletproof. And so they start buying that. And so this one, it took a while, and then they started finding these smaller names, and it's rallied 84% in the last month or two. it broke out of a downtrend line. Careful shorting these. I'd stick with the bigger names. It'll probably go down, but it also just broke out of that downtrend line. Like, here's the sector, what it looks like. These are the silver mining stocks. Down, beautiful downtrend line breakout. Again, this is where, you know, they were highlighted as longs. You had big positive divergence. There was every reason to be long at support. Many of the stocks were at support, not this sector right here. And this, now it's just hit that 412.95 level. Again, I created that back in August of 2020. That's how significant that support level is. So I created it back here, identifying it as support and resistance. You can see how well we dropped to it, had a huge bounce off the first tag, hit it again, you know, traded on it for a while, and once they gave it up, clearly gave it up, they back tested, got rejected. So that makes this a significant resistance level. You can hear my voice. My convictions are high, but there are no guarantees. You know, this thing, they could power through here. And the way this works, this game of trading and technical analysis, if they power through that and they power through these divergences, now look, most of these stocks are not going to take out the divergence anytime soon. They cannot, based on, you know, where these indicators are. They could pop this resistance and run to the next one. And guess what happens if that happens? A, we don't have the sell signals triggered, so nothing ventured, nothing gained, unless you're shorting here at resistance, you know, like I'm taking starter positions. And then you just manage your stops appropriately. But I'll be doing another video if we get up here to my next, you know, the next resistance levels. I'm just kind of picking this sector. Let me show you the ETF because that's easier to trade. Here's SIL. Again, I showed you in that post back here. SIL, we took it here at right off 22.55 support. I highlighted a few days ago, still offering objective entry there and on a break of the downtrend line. And that was then, and that was right here. That was a perfect entry. If you missed it then, if you're afraid to buy support, because I know I'm very contrarian. Most people, I'm shorting when everyone wants to buy, most of the time, not all the time. And I'm buying when no one wants to buy, everyone wants to sell. And so if you missed it, again, it's just like now in reverse, right? Back then, I'm saying this was you could buy the pullback to support. You had positive divergence, oversold conditions. It's exactly opposite of where we're at now. And then if you didn't buy there, or if you took a starter, maybe you want to add, there was your breakout candle. It was very clear, unmistakable. That's what I call a solid, you know, close above a breakout. And it didn't look back till it hit T2. We went blasted right through T1, hit T2. You could have took profits. We hit T2. You had a week of it trading there and a nice pullback along the way. Then it powered up, and that's a reaction. More so, I always say a reaction. That's why I list multiple targets. Each level is where a reaction is likely upon the initial tag. And I define a reaction of one of two things, either a pullback, when we got both here, and or a consolidation or on that level. And then it was mostly consolidation. In other words, a reaction in time more so than price. But there was a decent pullback to be made. And then powered through it. And just kept going, and now we've come full circle. So we are, you know, I don't see the resistance here as much. I don't have a resistance line on SIL, but again, the reason I do these videos, I just showed you the top, the top silver mining stocks, and quite a few of those were at resistance. So sometimes you can't see it on a sector or an index even. It's the same thing maybe with the NASDAQ 100. That's why I look at the MAG 7 or top holdings in the NASDAQ 100, because sometimes you can pick up some support and resistance levels on those big stocks that you might not make out on the indexes. So there it is, guys. Oh, and targets, of course, targets. I haven't really updated this chart, but just keep in mind, and I'll get it out to you. I'll get some targets out. I'll probably have to zoom down to the 60-minute chart. I don't even have it marked up on silver SIL, but put a trend line there, and you get your divergent, a high. And then you can see a cluster of trade. You can look at the volume price histogram bar right here. That's to the left of the screen. You can see there were a lot of trades that occurred there, and it's thinned down to about that level. There's a reaction low. So there's your first target right there, 32.33. If hit from where we're at right now, that's a 7% drop. If that gets taken out, I would call this one down to about right here, about 20. That's almost $30. So let's just say that's my current preferred swing target, about a 15% drop in the miners. Again, conditional on these breakdowns, of support, the support levels I've showed you. All right, we'll go to GDX. I already gave you that one today. S1, meaning, I call it benefit of the doubt support sometimes. You had a trend line which was taken out, but then you had price support. Why is that price support? What was that previous reaction high? There was a last, we had S1, S2, S3, and that was hit, never took it out. So I moved these, retasked these targets. I had targets there. Had that been taken out before, I had a couple targets down here, here. I forget where they were. But now these are your current targets. And that would constitute a drop of about 10% if T3 is hit, and if things get ugly, and I can see the possibility there, but again, I'm just going to have to take the charts one day at a time, see as they come here. I'll be looking at the euro, the US dollar, other things I like to track with gold. And let's just go to gold for a second here. Let's go back to gold. So this is what I gave you on the this morning, and I made very clear it was a setup. We were at support. There was only one thing to do this morning when I got that post out to you right now, and we're at support, and that would be to buy gold if you're bullish, because you buy a pullback to support, or you wait for a break of the level. And then you have S1 was a trend line, but then right below it you have you've got some reactions there and a gap and all that. So there's some support where it could hit and bounce and give you a false breakdown or a back test. But if S2 gets out, so you could do it incrementally, but again, the safe bet is to wait for this uptrend line to go in GLD, and then these are your near-term targets, and then a potential swing target down here, maybe even a target zone. I might add that in, but let's just leave it at that for now. So that's what it looks like on the 60. The daily chart, we had, remember back here when I threw out a couple months ago the pullback trading opportunities, and we hit the first support levels. It was a relatively minor pullback. We only had divergence on the RSI. We didn't have it on the PPO. Now we've come full circle. See steep, sharp divergence on the PPO. Volume drying up on this rally. You can see the volume bars drying up on this last thrust up, meaning fewer and fewer buyers. Nice clean trend line in which to trigger a sell signal. This is a daily chart again. And so when I look at it from here, probably come down to these reaction lows at a minimum, and that would take gold down 5%. But remember, if gold drops 5, that was 5.75%. The metals or the miners will probably drop double that. A lot of hot money in the miners, a lot of profits to be taken, and rightfully so. So that's it. So divergent. And then when you go to the weekly, this is one thing, I've talked about it for quite a while. Let me move this histogram over out of the way, give us a little more real estate. We have big negative divergence on the weekly chart of gold. That was the last bull market, ended in 2011. We had a blow-off top, a little blow-off top leading up to it, and we put in big negative divergence. You can see it all the way building throughout that bull market, and then it finally manifests in the form of a trend reversal. You had a breakdown and a back test of that trend line right there, and then a bear market of gold that ended in late 2015. That's where I started to get very bullish on the metals. And then uber bullish, I said if and when 130 went, which it did because it was a massive basing pattern, came after that nice big divergent low. You had a couple of overbought. Once the divergent low was put in, as you tend to do in a bull market, you want to buy. Overbought is usually, oversold when you're down on the 30 level on the RSI is usually one and done and fleeting. It's usually a gift to a bull in a bull market and a bull trend, if you recognize that. And then we got oversold there. Right there, and then that last time I highlighted them in February right there. That was it. And so, but that's it, guys. So we've broken out to new highs, which in itself is always bullish. The reason any security breaking out to new all-time highs is bullish is simple. From a psychological point of view, you have nobody underwater. Everybody, and I'm speaking kind of, generically or metaphorically, but at that point in time when a security makes a new all-time high, you don't have any trapped longs that are dying to get out, just waiting for a bounce. And so that tends to be bullish. However, if we fail, and it's got a long way, we can come in, look, and I've been saying this for a while. I would not be surprised. I'm even leaning towards at least a back test. It was a strong breakout. There was no back test yet. We could come in and back test. It's about 193. That's that previous high there, which was almost where the high on the previous bull market was. And then again, you can see it pretty clearly on the chart. We had that high there. We had it there, 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 and then boom, your breakout candle. So yeah, the price action's been strong, but everything I'm showing you in the chart indicates there could be more than just a little pullback coming. And again, maybe not. And if it doesn't happen now, you won't hear another thing from me unless you ask for an update until we hit that, until I see the next setup, be it long or short. So anyways, I wanted to get those out to you, and let me just show you a weekly chart of GDX. This is a downtrend line off the 2020 highs. You had a reaction right there, and now if we have a pullback here, that'll be a third and confirming reaction. So this becomes then a very significant trend line. Right now, it's what I call a potential trend line, because in my opinion, trend lines need to have at least 3 distinct reactions to validate it. Otherwise, because any 2 points can be connected at random. So if we get a pullback there, which obviously I'm favoring, then that'll be the trend line to watch. In other words, bullish if we ultimately break it, and then the next resistance level 40.29. So you can see the miners have been lagging gold. There, gold again punched through to new highs, and the miners are lagging. Why is that? Well, one of the things I've been mentioning recently is energy. Crude oil, which is their second biggest cost behind labor, just like the airlines. Labor is their biggest expense, and fuel is the second largest. So oil prices still remain to the higher end of the range in recent years. Same reason I got uber bullish on the miners back here. If you go back to it's all archived on the site. I was citing both technically this breakout right here in GDX, the positive divergence, we had bullish divergence right there at the lows, a beautiful downtrend line, the 200-day moving averages, and crude oil was very low. So I said, not only technically do you have a beautiful setup in the miners, but fundamentally, because crude had hit real low levels back then, and so that should have been, and it wasn't being reflected in their share prices, but now it is, and that's kind of what's holding them back, guys. Is what I'm getting at. Most likely, what's holding them back. And look, if they break out, they can run, and they should be, especially if crude goes back down. Right now, I'm happen to have a bullish outlook on crude. Been long that one for about a week or so, 2. Yeah, we'll see. So that's GDX, and then I'm going to rifle through the big names here. Newmont. I mean, look at these. They were beautiful setups. This is a weekly chart. Again, I covered most of the silvers in that last video. I have different boards too with these guys being drawn, but let me give you the daily chart here. So here's the daily chart. Newmont, one of the biggest. This is the biggest component of GDX, or at least by market cap, 51.2 billion. The biggest market cap of gold mining stocks. So a beautiful downtrend line breakout there after a little whipsaw period, but negative divergence, rising wedge. Target right there, minimum 40.24. AEM just broke down. So here's one, boom, bing, bing, just broke down today. Beautiful cleanup trend line, sell signal triggered, and it's, in my opinion, probably the first of the others will most likely follow. There's a little uptrend line for Barrick. There's WPM I already covered. That's also a component of GDX. FNV, Franco, Nevada. Look at that nice clean downtrend line. And that'll probably want to come in if it breaks the trend line, and then you have price support here at 123.59. It'll probably want to at least back test the trend line. That would be a potential target. KGC, I haven't marked this one up yet other than to show this extreme overbought reading. And the last time we were this overbought on the RSI, you have to take it all the way back to right here. And what happened is you got a shot across the bow and then another thrust up that put in negative divergence. So we could see that here too. Maybe we get a little head fake, one more marginal new high. And again, like I always say, the charts are dynamic, and so is my analysis. But right now, most of them have already put in those divergent highs. And again, they have some pretty clean trend lines in which to trigger sell signals. Royal Gold, RGLD, divergent high, same story. PASS, Pan American Silver, which I would have already covered when I did the silver stocks. Again, these are all components of, I'm clicking through the watch list or the component list of GDX. AGI, Alamos Gold. Got a little price support here. It consolidated in this range. So 1550, but then good pullback targets about 1438. And again, I might extend some targets or I may truncate them. Sometimes I change my mind, cover, and then, depending on what the charts are doing. AU, beautiful little divergence. Actually, that divergence started back here. And you had a divergent high 1 there, correction 1. That was double digits for sure, and then rallied up. But now we have this trend line and a bigger wedge, bigger divergence. This one could be called all the way back down to, I'm going to give you another target. Targets. Let me say 2155, and if things get ugly, maybe all the way down to that 20-ish area right there. All right, Hecla, I'm sorry. There it is, negative divergence, very clean negative divergence, and at resistance too. This is an old line I've had here forever and a day. You had reactions up here, reactions there, it was support there, hit it, pulled back there, punched through but couldn't hold it, tried again, failed, tried again, failed, at resistance, negative divergence. I'll stop the video here. If you want more or any particular ones that you're in, let me know in the comment section. We'll try to keep this thread on topic. And then later today, I'll get another video out. Remember about NVIDIA. Let's not forget NVIDIA is tonight. And I've got some thoughts there I want to share, but I'll keep this video focused only on the miners, or right at the 36-minute mark, so not too far. Your options, guys, if you're not aware, you have, if you don't trade, if you want an ETF but you don't have a you want an inverse, let's just say, you can short the GDX, of course, or you can do dust. Is used to be 3 times, and they cut it down to 2-time leverage, and so it's the bearish gold miner. It's just 2 times short GDX basically, and look at that, just a beautiful bullish falling wedge pattern, right? Just like when we went here, Nugget is the inverse if you're bullish, and that's when we got bullish and long. Nugget was back here in February, or GDX, or silver miners first, and I highlighted it both, but said, overweighting the silvers. And then that's your Nugget. If you're in Nugget, you've got a trend line there. You've got divergence. It's just going to mirror pretty much GDX. Just has leverage. Long-term charts, I don't really chart them because you have decay over time, especially in volatile ETFs. So they're good hit and run vehicles. They're not good buy and hold vehicles. If you want to be in the miners for the next 5 years, 2 years, or next year, let's say, even 6 months, use GDX. You don't need the leverage. They're they go up and down enough. But these, you can, not that I'm condoning it, but you could trade in IRAs. It's a way to short an IRA or anything like that by, again, buying the inverse like dust. All right, I'm going to stop it here, get the video out to you guys, and then we'll follow up today with, there's not much to be said about NVIDIA. It's going to report tonight. I'm 50-50 on a post pop. I'll cover that in another video. Let me get this one out to you guys. This has been Randy Finney with Right Side of the Chart. Have a great day.